Welcome to Second Take, the show that focuses on the issues behind the news. Much interest is being shown in relation to the opening of the freight logistics system to private sector participation, but there's also an urgent need for immediate investment. Terence Creamer joins me to discuss the short and medium-term investment outlook. Welcome, Terence.
Hi, Sashni.
Now, can you tell us about the response to the markets testing exercise across rail and port system that has been positive?
It's been very positive, but if we take a step back, we have to understand the sort of state of collapse that has happened in the system, still monopolized by Transnet over the last number of years. We had that massive port congestion, especially outside of Durban and Cape Town a few years ago. We've had the rail system really not delivering, especially down that coal line. We have trucks now that are dominating major routes, both down to Richards Bay. We've got trucks that are having to take iron ore even to the domestic steel mills. It's really been a very big deterioration over the number of years. And so there's been a focus under Operation Vulindlela to try and claw back, recover, initially stabilise, recover. We've had new Transnet leadership put in, and there has been some progress that we've seen under Transnet. And we've seen, for instance, a lot of port equipment being bought by the Transnet port terminals. We've seen a number of tenders going out by TNPA, which is the landlord at the ports, for private partners to run terminals. And there are a number of private partners already running terminals at South Africa's ports. So we're seeing some progress, but there's still major backlogs, and we're nowhere near where we should be. And the target is 250 million tonnes by 2030 across the freight logistics system. That's no longer just on road, but it's on rail, and we sort of fell below the 140 million tonnes. We've recovered to 160 so, and the target this year is around 180 million tonnes. So you can see there's some recovery, but to get to those sort of levels of 250 million and beyond, we need to do something quite different. And therefore, there's a sort of a policy now in place to pursue private sector participation across the ports and across the rail sector. And Minister Barbara Creecy put out a RFI, a request for information, earlier this year. Massive interest, as you said in your intro, in that. 161 or 63 responses to that RFI. This is pre-commercial, so it's not a tender, but a lot of interest, especially around the iron ore line and the manganese line. A lot of interest around the coal line, and also interest around the container lines and ports. So it's now a process of, there's a PSP unit, as they call it, a private sector participation unit, in the department sifting through that information. It's all confidential, so we don't know what's in there, but to then prepare basically tender documents. And those tenders are going to come out in the form of a request for proposals, and we're expecting that before the end of this year.
Okay. And what about the investments? When can we expect that?
So the investments are going to take a much longer. So the investments, Minister Creecy says, once the RFPs are out later this year, there'll be a bidding period. Usually that takes a number of months. I think it's very much modelled on the Independent Power Producer Office, and we've seen how that's been working since 2011. So there's a number of months that the companies are given to respond to the RFP. Then there'll be a number of months of adjudication before preferred bidders are announced. And then there'll be probably a year to get those projects to financial close. So we're talking about a sort of 2-year gestation period from RFP to financial close, not a shovel in the ground yet, So then there has to be construction and investment. So we're talking about, sort of the end of this decade that we start seeing some of these investments taking root. So these are long gestation periods. We've seen it successfully work in the electricity sector over a number of years. That's now hit some sort of turbulence, and we're seeing less and less of that procurement taking place, and it's been displaced by private procurement for now. But there's efforts now to restore that tempo around public procurement in electricity, the big sticking point being the grid. But on the rail and port side, it's going to be sort of virgin territory, and therefore even that 2-year period is optimistic in some ways, and that's before we actually see construction. So there's so long way to go. I mean, it's different models. We're going to be starting to see build, operate, and transfer type models. We're going to see PPPs. We're going to see concessions most likely. And this is all areas that we don't have a lot of experience. So the rest of the world thankfully does. So we can sort of reverse integrate some of those lessons. But it's going to take time to start seeing these investments really taking place.
So given the large backlogs, what can we expect in the interim?
Well, I think initially we're going to have to see a lot of support for Transnet. Already taxpayers has helped Transnet out a bit, mostly in the form of guarantees. They've been trading under 47 billion rand guarantee for a number of years. Another 51 billion guarantee has been approved. So that's the only real game in town for the immediate future. So Transnet needs to be supported. There is a mechanism under the National Treasury called the Budget Finance Infrastructure Facility, the BFI, and they're now running quarterly bid windows. So it used to be, I think, annual. It may have reduced to 6 months, but it wasn't very steady tempo. Now much quicker tempo. And Transnet's already bid into 2 of those bid windows, one for the Cape Town Harbour upgrade, but also for some of the rail projects. There's a big need in the area of rail infrastructure, especially signalling, not only for the freight logistics system, but also for the passenger rail. That's really a big constraint to putting trains back onto the rail, the signalling. There's been a lot of theft around that infrastructure. PRASA, for instance, has got new trains, but they can't run them because there's no signalling. And there's also no infrastructure, or the infrastructure is not in good state. So there's a lot of effort that can happen immediately around that. Also, we've got the separation within Transnet between the rail operating company and the infrastructure manager called TRIM. And TRIM has been running a process to try get non-Transnet trains onto the system. The big, I think, sticking point there is the state of the infrastructure. What guarantees can TRIM give to these companies? Also the tariff, there's still unhappiness around the tariff. So we haven't seen any of these third-party train operating companies on the railway lines yet, but there are bids in, and hopefully soon we'll start seeing some of that. But until we get the infrastructure up to scratch, and that's going to be initially through the BFI and Transnet directly, and hopefully over time through this PSP, it's quite difficult. And therefore, a legal mechanism is being put in place to allow for those companies that rely on the rail system, the coal companies, the iron ore, to maybe co-finance some of those initiatives. So that's also being worked on. And then overarching all this is that this is a reform that we want to embed, not just through a policy, which is what we've got at the moment, and through Operation Vulindlela's sort of sweat equity and the sweat equity of Transnet, but actually in legislation. So the Minister's going to be taking this and packaging it into a rail bill and putting it before lawmakers to approve, so that these reforms, there's certainty around these reforms going, because they are, as we hear, the long gestation, these are multi-decade assets. And by the time, for instance, they get transferred back to the state, they need to also be in a certain condition. So, when we do these RFPs, we have to say, maintenance has to be built into these. Obviously, we're always going to build in transformation. We're always going to build in localization aspirations. But those sort of things where you can't have it handed over in 20 years' time or 25 years in a dilapidated state. So many moving parts, very complicated. And therefore, we need to have a sort of twin-track approach, relying on Transnet and its customers to do something in the short term, and with the Treasury BFI, and in the longer term, more and more relying on the private sector participation.
Thanks for speaking with us, Terence.
Pleasure.
That's it for today. Join us again next week for more news analysis. To subscribe to Creamer Media's Engineering News and Mining Weekly, please email subscriptions@creamermedia.co.za. And don't forget to listen to the audio version of our Engineering News daily email newsletter.